Today, we are looking at two stocks moving sharply in the pre-market. They are YYGH and VNCE. This video explains what is happening, why it is happening, and what it might mean next. First, VNCE Holding Corp. The company just reported its second quarter results for 2025. Revenue was about $73 million compared to $74 million last year. That is almost flat, but profit improved a lot. Net income jumped to $12.1 million, or 93 cents per share, compared to only $500,000 last year. This shows a big change for a company that had struggled to make money. Gross margins also improved thanks to lower product costs, better pricing, less discounting, and some tax credits. After-hours trading showed strong upward movement. Part of that move is linked to wider market sentiment. Investors hope the Federal Reserve will cut interest rates soon. Lower rates reduce costs and can increase consumer spending, which helps retail companies like VNCE. Management also gave guidance. They expect operating income to improve and EBITDA margins to move between 2 and 5%. This mix of better profits, better margins, and positive guidance is pushing the stock up in pre-market trading. On the technical side, VNCE is trading above short-term averages and volume is picking up. Swing traders often watch these signals. Optimism about interest rate cuts is like fuel on the fire. Now, Group Holding, ticker YYGH. This is a smaller company that offers workforce, cleaning, and facility management services in Asia. It recently announced a registered offering of about 6.6 million shares at 60 cents per share. That move can raise capital, but also causes dilution. YYGH also reported preliminary results for the first half of 2025. Revenue is expected to rise 53% year-over-year and gross profit to almost double compared to last year. These are strong numbers for a small company, but in the pre-market the stock has been mixed, even down about 3% in some reports. This shows how volatile and thinly traded microcaps can be. Good news does not always mean an immediate rise. So what is happening here? With YYGH, the market is weighing the positives of strong revenue and profit growth against the negatives of dilution and execution risk. With VNCE, the news is clearer. It shows actual profit, margin improvement, and guidance combined with macro tailwinds from possible rate cuts. For both stocks, macro conditions matter. If traders believe the Federal Reserve is becoming more dovish, risk assets get more attention. VNCE benefits more directly because of its retail business. YYGH may benefit too, but its smaller scale makes it less predictable. From a chart point of view, VNCE is trying to break out above resistance with strong volume. If it can hold these levels after the open, it may trigger more momentum. YYGH may try to bounce if the offering is absorbed and buyers return, but thin liquidity can create sharp moves in either direction. In short, why are VNCE and YYGH moving today? VNCE is up because of solid quarterly profit, margin improvement, positive guidance, and favorable macro expectations. YYGH is drawing interest because of strong revenue and gross profit growth, but the share offering adds uncertainty. Both are high risk, especially YYGH. If you found this breakdown helpful, please subscribe and like to get more quick deep dives into pre-market movers. And leave a comment below. Do you think VNCE will keep rising, and will YYGH recover from the offering and deliver on its revenue growth? Your opinion can help create a great discussion.